Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of June 15th, 2020. And this week's update is going to be short and sweet and to the point. And I'm going to point out an interesting technical setup that we have on the S&P 500, and probably there on the Dow and the Russell and the NASDAQ as well. I'm not going to talk about, the market trend, what it should have been doing, what it did do, what it didn't do. Whether it was Robinhood traders driving it up or whatever. We're going to just focus in on a unique setup. And so this is a daily chart of the S&P 500, and you can see, if you've been following the market, this is no surprise, right? We had a big down day on Thursday after this amazing run up. On Thursday, the Dow was down about 1,800 points. The S&P 500 followed in a relative percentage basis. Gap down and a big elongated price bar, this red price bar that I'm showing you right here. Now you can see on Friday the market was up a little bit, and this is what is called an inside price bar. It's an advanced technical setup, but when you have a big elongated price bar like this, and you can see what you pay attention to is the body of the candle. And so the closing low price was 3,002 on the S&P 500. And then the next day's candle is, the body of that candle is inside, smaller than the body of this big candle. So the theory goes that whichever way price breaks, whether it goes above the top of the elongated candle or below the bottom of it, that is where the momentum is going to go for the next 4 to 5 or more trading sessions. So there is a unique setup. And right now the S&P 500 futures are implying about a 300-point drop on the Dow, and on the S&P we're down at about 3,005. The opening gap was down, it's retracing. We should expect this to then continue down overnight, and again implying a down open. So if the market opens below the body of Thursday's candle, and again the closing price 3,002, so if we open below 3,002, wrong thing. If we open below 3,002, and I'll put this on here on the S&P 500, you can translate this directly. Look at the same candle bars on the SPY if you like to trade with the SPY, right? There's a pretty good short opportunity, and we would expect a continued move down, and a Fibonacci retracement for the up move would take us down somewhere in the 2,700 range. If you would like to see this, I'm going to trade that. If those conditions happen, right, if the S&P 500 opens below 3,002, I'm going short. If you would like to see the details of that trade, I'm going to use an option. I'm going to do it on the SPY. Sign up. 30-day trial, $37. This one trade could easily pay for a year of subscription. And if I'm wrong, we're going to use risk control and we'll lose a little bit. If we're right, we're going to make a ton of money. So that's this week's update, short and sweet, just very focused on a advanced technical setup. Hope you find that helpful. I welcome your questions, your comments, and your feedback. Thanks.